is exit trading. I already have trade 1 booked. Took it from the 650 handle, ran it up past the 675 handle. We pulled back and left this inefficiency and premium that I want to target after inverting this fair value gap. We're at all-time highs, so shorts are pushing each other further and further in the red. This is our bullish inversion fair value gap on the 1 minute chart. And the reason I decided to jump back in this is because we swept this low created prior to the 8 o'clock hour. So sell-side liquidity has been ran, that's condition number 1. Bearish PD array has been inverted, which is condition number 2. And a bullish PD array has been respected, which is condition number 3. So this is a bullish fair value gap. And I'll actually add there. And I'll set my stop below the fair value gap low here, risking a low of the sweep. So our first entry wasn't the best entry, the 665 handle, which is relevant to the high of this inversion fair value gap. We did trade above the previous candle's high. So the idea here is bulls want to take it to this inefficiency up here, unless the sellers can get momentum, which is always possible because they're at all-time highs and have to be profit taking from longs because it's Wednesday. So this could end up being a loser, but then I would just be fine on the day. I would be up. Well, this trade kind of gave me 2R. While this trade is allowed to rock, I'm going to adjust these targets, and I'm going to review the previous trade that you see on the left hand of your screen, left hand side of your screen. The first high of this handle is the 681 handle, so 681.25 is where this imbalance begins, but if you look closer, there's this volume imbalance right here, which should be the draw on liquidity, right here at the 83 handle. So we will have to take profit for that 83 handle. The high here at 832 is 692.25. And I think I will hold for that. Might actually even just hold for the 700 level. But that's a little zealous in my humble opinion. So we do have one take profit just below 20 handles. As you can see, this trade is moving in my favor. We have taken this high, I'm expecting displacement above it, and I'm looking for us to tag this little swing high here. Now I can go over this trade. For the same reasons that I'm taking this trade, I was interested in getting involved on this break. We had a swing low at 552, that was violated at 7 a.m. And then we displaced above this down close candle, and in fact closed above both these down close candles, which were the candles that drew down and took this liquidity. We displaced up, indicating that there was a buyer of those stops there. They were using those sell stops on the market to put a big order in. Price trades up, retraces back into this down close candle. Anybody trading short on breakout is trapped. They're offered mitigation, they get to cover here, but they're never put into profit. Price runs against them and breaks above this highest up close candle of this consolidation prior to the sweep, which we would consider our ICT breaker. We extend it out in time. What also happens when we get this close above? We have these fair value gaps in here. And so you can see my entry was at basically the low of this candle, on sweep the low of this candle, at the 52 candle, and then I added again as we dug into this gap here at the 650 flat. I actually could have missed the opportunity to add this fair value gap. That's permissible. But what happens? Price continues accumulating, enters a stage of reaccumulation, expands higher, does the same thing here, sweeps all this high, in fact closes above all of them, and then trades back down, consolidates back down, takes an internal range sell side here into these fair value gaps aligned with these high sub close candles prior to the sweep of liquidity, and so price does in fact make its symmetrical price move, and I trailed out at the 84.75 handle there. But that was the setup for the 7 o'clock hour and a portion of the 8 o'clock hour, and I'm getting re-involved around the 9 o'clock hour. Price likes to move in these 90-minute intervals, so if I go to 7 o'clock at 8:30, there's a cycle here where price just expands. So within the next 90 minutes, we expect some measure of retracement and reversal to occur. And so this could be the retracement. If we're not going to reverse lower or trade lower on the day, then we're going to disrespect this entirely and trade above this, potentially to the psychological 17,750 level, because we broke above 17,755. And for these next 90 minutes, we go 8:30, 9:30, that's 60 minutes, 90. This is the next 90-minute interval where we expect price to begin some sort of expansion. That's what we see occurring here. And actually, I'm going to adjust my targets. 64.75, 64.75. This is where the technical science comes into play. I'm going to set fulcrum points, right? These are standard deviations of this main consolidation that occurred during London session lunch. And so this entire range, you can imagine midpoints here, and you can imagine that if price wants to go higher, it wants to go lower first to take stops. What's this right here? Swing low. What are people going to want to do? Put stop losses there and sell stops there. What happens? We start sweeping the low and then continuing higher. So we sweep the low one more time for good measure. If we're anticipating a high of this range to have buy stops above it, and the market's at all-time highs, we want an idea of how high the algorithm will be willing to distribute accumulated longs in the lower end of this range. So for example, we know they're accumulating here because there's volume there, that's where the stops are, and they're trying to get in the direction of the trend. Furthermore, right here, we know after that trade was a winner that they were accumulating in here, all below the 50% level of this range, right? And on this breaker here, they're doing the same thing right here. Now when they're overzealous, when they're putting the money, if they're fearful, they trail their stop right there. Notice my trail out is right here, it's not right here, right? And I'm re-engaging here. So what happens? Price rallies higher, completes the first standard deviation of this range, right? Now we can assume this is some sort of higher time frame breaker, right? This is some sort of higher time frame candle, and there's some higher time frame swing low. Maybe it's just within 3 candles. There's a swing low here, and price here and here violates it. That's the raid. Price continues higher, which is expands in the range. Now we have anything below this high is considered discount, and now we're looking for this inefficiency and buy side liquidity to be delivered. Now, does this seem random? Is that random to you? Let me ask you a question. Is this random to you? These things aren't random. Prices come back up to the 75 handle now. Prices move 50% to my take profit, so I'm going to cut my risk in half to this 60 handle, which still allows the price to dig into that IFVG one last time, and the high of this breaker. But mainly I'm looking for continuing. There's volume imbalance here, which we want to trade through. Remember, we're looking for this high to be pushed into. If bears want to participate in this market, this would be an area where they could, because if we draw Fibonacci here, we have bearish optimal trade entries. Fibonacci 618 is actually right there, right ahead of this volume imbalance. The 705 level is the beginning of this inefficiency, and the 786 is within this fair value gap after sweeping this high. Here's the 0.27 level, aligning with the sell stops of this consolidation. 618 level, which targets these stops, and the symmetrical price swing, which looks to take out the 230 London low. We are up 50 ticks, we might take 50 ticks. We'll be content with 50 ticks and set stops just above break even. There it is. This seems like long inducement. Notice the high of this candle's having a hard time getting through this volume imbalance. I'm gonna cut the trade there. It can continue higher, but I personally didn't like this reaction. For my liking, it just came up too fast. It can run without me. The hard part of trading isn't finding out where you're in. It's deciding how you manage your position afterwards, and then how you manage yourself after you've made the decisions on the position that you have, regardless of the outcome. So, for example, I could absolutely be leaving profit on the table here, no big deal. I made over 12 and a half handles on the position. I already banked the position here, and I'm sure it was all random. But ahead of the 9:30 open on a Wednesday, I can be content with this. Got my piece of cake, and I'm leaving some at the table for everybody else. Isn't it kind of crazy how price went immediately where I said it was going to go? Do I know what it's going to do now? Not entirely, because we're ahead of the 9:30 New York Open, we're in a bearish optimal trade entry. We just filled this fair value gap. Sure, we have some buy side liquidity up here, sure, we have this imbalance here, sure, price is really bullish. But I don't want to be caught long when they want to do a sell side liquidity rate to bring it up higher. So I'm going to call it a day, actually, because this is all I need out of trading day, right here. Yeah, but I'm sure it was completely random.